Hey guys, thanks for tuning in to a Better FAQ video. Today I'm going to talk about what to do if you are self-employed during the COVID-19 crisis and how you can apply and whether you're eligible for relief from these various different relief packages like the CARES Act, unemployment benefits. There's a lot of different ways and different types of applications and loans and grants available out there, but there's a lot of confusion because there's not a lot of information. It changes pretty regularly, as in like hourly, if not daily. And there is also confusion because there's some ambiguity about who's eligible, especially when it comes to self-employed people. Now, let's start with the various different ways that you can be self-employed in the eyes of the law and the taxing agencies. So first, self-employment can be an independent contractor. If you're an independent contractor and you work for various different people that hire or engage you as a contractor, for the most part, and in most places and by most legal standards, you're self-employed. You should have a business license. That's a thing that will very much help you be compliant and confirm that you're self-employed. But contractors are considered self-employed, at least here in California. Well, that's one way. And that doesn't mean that you need an LLC or a corporation. You can be an independent contractor and you can have an LLC or a corporation, or you can be what's called a sole proprietor, which is just you doing business, whatever it is you're doing, and that can be as an independent contractor. So that's one way you can be self-employed. Also, being self-employed means that you're the owner of an LLC or a corporation. And typically in those situations, there's going to be some combination of how you pay yourself. You'll either pay yourself distributions or owner draws or something like that from the company that's not on payroll, it's not a W-2, you're just from the bank account paying the owners some sum of money. And that's one way to pay yourself when you're self-employed. The other is through payroll on salary, technically as an employee of your company, that LLC or that corporation, and that's going to be a W-2. And so you can do both too. You can, like I do for my law firm, I take a salary, but I also take a regular monthly ownership distribution that supplements my salary. And there's all kinds of financial reasons and strategies and tax reasons to do that. Talk to your CPA about that. But that's another way to be self-employed, where you pay yourself a salary and your ownership distributions or draws. So those are a couple ways of being self-employed. Now, what of those actually make you eligible then for either unemployment or some of these programs like the Paycheck Protection Program, which that one in particular is part of the SBA disaster relief that's been part of the different funding that the federal government has allocated. So let's start with unemployment. Unemployment is traditionally only available for people that were paid on a paycheck, the people that are W-2s. Why is that? So the reasoning for that, and it all kind of goes back to where the money comes from and then who can take advantage of that money, and it's all related to the fact that traditionally only employees are eligible to receive unemployment when they are laid off from that employment. Now, the reason for that is that every paycheck you receive as an employee, whether you're salaried, non-exempt, exempt, hourly, full-time, whatever the case, if you're a W-2 receiving a paycheck, there are withholdings that the company is required to withhold and pay in taxes, and one of those is going to be unemployment. So every paycheck that you've ever received as a W-2 employee, you and the company paid in to the unemployment benefit fund in that state. And so that's why employees are eligible to take advantage of unemployment, because they've been paying in out of their own paychecks on that fund and thus are able to take advantage of it. Now, with everything going on with COVID-19, that has been expanded. Independent contractors are eligible to seek unemployment in California. However, when I'm recording this right now, which it's April 3rd, 2020, the system to apply for unemployment in California has not been updated to allow for independent contractors to apply for unemployment, even though they are actually eligible. So that's unfortunate, but keep an eye on it, pay attention, keep trying to get in there and apply, because if you're not eligible for unemployment as an independent contractor, meaning you've never received a W-2 payment or a paycheck that withholds, that's when you're not going to be eligible until they update the system. But going back to what I was talking about, if you've received a paycheck under a W-2 in the last, I believe the number is 18 months, but let's just use a year to be safe, then you've paid in under unemployment and you're eligible for it. You can apply for unemployment. Even if that was one day, you did a one-day gig, you got paid a W-2 for that 6 hours or 8 hours of work, you are eligible for unemployment. You'll list them as your last employer, and presumably that means you're also eligible for the additional $600 a week that has been authorized for unemployment benefits to be paid to people that are unemployed during this pandemic. So that's one way. If you're, and hopefully, connect the dots there. If you're self-employed, you're paying yourself a salary, you're going to be eligible for unemployment if you're no longer able to pay yourself that salary, even though it's your business. You may still be operating, you may still be doing business, but you can't pay yourself that salary. Well, you can still apply for unemployment for yourself because you were paying yourself a salary, because you were paying in on unemployment. Now, the more confusing question that we have here is going to be about the Paycheck Protection Program, which is designed to give money to employers to help them with payroll, rent, utilities, benefits. Compensation and wages, though, falls into the payroll sort of definition under this Paycheck Protection Program. So, right off the bat, though, let's clarify something. With the Paycheck Protection Program, that's money that can maybe later be forgiven. And if it is forgiven later, it's only going to be forgiven if it's for those like 4 things I said: utilities, rent, payments, wages, compensation, and benefits. So, you can still receive the money as a loan, which will be under a 2-year term, which starts being due after 6 months from receiving that money at a 1% interest rate. And the Paycheck Protection Program, by the way, you apply through your local lender or just whatever lender you use. They don't have to be local. It could be Chase. But whoever you want to work with, you actually go through them for this, and the SBA personally guarantees it on your behalf, so you don't have to personally guarantee it, and so that those banks are willing to lend it. That's also why it went from a 0.5% interest up to a 1% interest, because the banks were not having 0.5%. So, Paycheck Protection Program, that's a loan. However, if those 4 things, rent, utilities, compensation and wages and payroll, and benefits, if you use the funds for that, then there is a potential that you can have that portion of the money you're given that you've used on those things forgiven later, and you don't have to pay that back as a loan. So, the question becomes, if you're self-employed and you're not paying yourself payroll, you're only paying yourself distributions and draws, are you eligible for the forgiveness of paying yourself those distributions and draws with the money that you get from the Paycheck Protection Program? And the answer is, we don't know. However, there's a couple things that would indicate that you would be able to use that Paycheck Protection Program funds to pay yourself your ownership distributions or draws, and then have those funds forgiven later. The things that indicate that that might be the case, again, we don't know for sure, but if you're paying self-employment tax on those distributions and draws, that self-employment tax is meant to go into some of those types of state funds, and so perhaps then that makes you eligible for forgiving that later, or even for unemployment. So, if you pay self-employment tax on your distributions and draws, that may then allow you to forgive those sums you pay yourself under the Paycheck Protection Program. And another thing that is important in that regard is that if, for instance, you're an LLC or a corporation and you've elected to be treated as a C Corp or an S Corp, which you can be a corporation and be treated as an S Corp, you can be an LLC and treated as an S Corp, you can be an LLC and treated as a C Corp. Watch other videos on that. But if you are elected to be treated as a C Corp or an S Corp, it does actually appear that if you're not paying yourself a salary and you're only doing the distributions or the draws, that you cannot use the payroll or Paycheck Protection Program funds to pay for your draws and distributions and then later have that forgiven. You can still get that money, use it for those purposes, and it'll be a loan later. You just can't forgive it later. So, these are some of the differences of and the ways that you can apply for relief as someone that's self-employed under all of the relief packages and under the COVID-19 expansions to our unemployment. And so to recap that, 1099 contractors, you're self-employed. You can apply for unemployment under the expanded unemployment rules in California once they get the system working. Additionally, as a 1099 self-employed, you can also apply for Paycheck Protection Program to help to either as a loan or potentially as some that can be forgiven. Additionally, as owners of a business, if you pay yourself a salary, and this goes for anybody that's been paid on a W-2, whether it be salary, hourly, full-time, whatever, you are eligible for unemployment if you're no longer able to be paid or you've been laid off. And then also self-employed owners of businesses perhaps can use the funds from the Paycheck Protection Program to pay themselves ownership draws and distributions, and it may even be forgiven later, but it certainly can be used and then paid back as a loan. And then to wrap things up here, all of the other available aid out there is almost certainly going to be a loan. There are a few grants out there that you can find, but most of them are going to be loans. And the good thing here is that at least in these situations, the interest rates and the repayment periods are going to be much more relaxed than normal lending and debt that you would have. Most of the time, it's going to be below 4% or 5% on the interest rates. And again, the terms are going to be more favorable. And for a lot of this stuff, they're really relaxing what kind of collateral you have to put forward. For the most part, it's usually going to be that you have collateral from your business for loans above $25,000. The Paycheck Protection Program, no collateral required, no personal guarantee required. Economic insurance disaster loans, the other SBA loans, sometimes those will require a personal guarantee or a collateral from the business. Like I said, usually over $25,000 for that amount they loan you. But again, self-employed people, 1099s, you're eligible for some of this stuff. And hopefully this video has clarified how and when. And we hope that you tune in again and hopefully are able to weather all this crazy, strange times we're living in. Good luck out there. Stay safe. Thank you.